Chris Vermeulen is back to break down what's happening with the markets and make sense of it all. Chris, it's been a long time. Welcome back.
Yeah, thanks for having me, David.
It's been almost a month since we last spoke. I'm going to start with a series of statements covering a variety of asset classes, and just tell me from 1 to 10 whether or not you agree or disagree, from 1 being most strongly disagree to 10 strongly agree. All right, so let's start with gold. Gold is stuck in a range. It's not going to go any higher until next year.
Agreed.
Okay, so strongly agree, 7 or 5 or 8?
Oh, yeah. Sorry. I think, there's a big range that it's in. I don't think it's going to break 2000 this year. So I'm in agreement that, it's, 8 in agreement that it's not going to hit new highs.
Okay. And Bitcoin is in a major bull pattern?
Correct. That's 10 out of 10. It's in a major bull pattern.
Okay, we'll talk about that too. And the S&P 500 is flagging downward, is in the bear pattern.
I disagree. I still depends on your time frame, but I disagree. It's still in a raging bull market. This is a pullback, very bullish.
Okay, and the oil market, oil is poised for another breakout.
Yep, 10 out of 10.
All right, let's talk about gold then. Okay, so as expected. Now, I didn't cover all the asset classes with you offline, but I kind of got a sense of what you were feeling. So that was as expected. Gold. All right. So what's happening with gold then? You said that it possibly won't go any higher until the end of the year. So
yeah. So if we were to look at my charts, I've got the weekly chart here of gold. Gold broke out in mid 2019. And you can see here, this is a very clear rally with a big bull flag. So gold is in a very strong bullish pattern. Long term, I definitely think it's going to be working its way up to 2,600 and beyond. I do think this is obviously a huge range from where we are right now, 1,750 all the way back up to almost 2,100. That's a lot of work to do. I don't think it's going to break that out to new highs this year, but I think gold is trying to put in a base. I think it's going to trade in a range here between 1,700 and 2,000 until the end of the year, and next year could be a very big year for gold.
Okay, can you explain why exactly that chart shows a bull pattern? Because if I'm looking at that chart, the moving averages are kind of flattening, which may suggest that momentum has stalled. So, anyway, help me understand this, please.
Sure. So just because the moving averages are going sideways doesn't mean the trend's going down. It's just meaning it's taking a pause. Now, technical analysis kind of 101 is you've got a rally, which is considered the bull, kind of the run. And then usually price flags in the opposite direction of the previous trend. So this previous trend was up, and then it flags down and takes a breather. And really, the longer something trades sideways or downward, the bigger the pattern is to the upside. So if we were to just base gold off this move, we can go off these lows using Fibonacci extension. And Fibonacci is great. It's very accurate. It tells you how much momentum and power is in one of these patterns. And if we were to squish this chart down, you can see gold's pointing to 25.95. So based on this pattern, as long as these lows here, these 3 lows hold, that's where the upside potential is. And this is just a big bull flag pattern. And a bull flag is a halfway point in a move. So this first run up, you have a pause, and then it's going to have the same amount of movement to the upside. So to me, this is very bullish. On the short-term basis, as a swing trader, it's clearly in a downtrend. It's been trending lower for a year. And it still doesn't look really bullish just yet from a short-term perspective. But an investor, this is a very, very attractive looking chart based on this pattern. We are testing up near these highs that we saw back over here. We broke through them. And this is a giant cup and handle potential pattern that points to very high prices. So I still like, as an investment, I love it. As a trade, I don't like gold at this point.
Right. That was my next question. Does Fibonacci tell you the timeline of how long these consolidation periods may last?
You never really know how long they're going to last. Typically, if it's a balanced move, so you see these vertical lines here are 1 year. So we've kind of had like a 1, 2, 2.5 year kind of rally, and then it's pulling back for the next, the last year and a half. I would like to start to see it, hopefully the bottom's in. I'd like to see it start to move up and start to do this next run. And that would point to, in the next year and a half, 2 years, we'll probably see gold at that $2,600 per dollar mark.
Let's segue quickly into the gold miners now. I know last year and earlier in the year you were bullish on the gold miners. Now, gold obviously hasn't done too well this year, but I'm curious as to why gold miners exceedingly underperformed. I mean, gold went down, what, 8% year to date. The GDX went down 20%, something like that. So I know they've got a higher beta, but it just seems to me that the valuations don't really match what's going on in the underlying gold market. What do you think?
Yeah, well, gold miners are a leveraged play on the underlying commodity. So if gold goes down 8%, miners are probably going to drop 20 or 30%. It's just the way that they've pretty much equities move around commodities. The pattern is still, it's still bullish. I mean, we're making a series of higher lows. We're pulling back. This bull flag pattern, it really has now kind of gone beyond the point that I don't really see it so much as a bull flag. It really should have continued to go higher from here. But when something's not balanced, when the flag is just as long as the pole is tall, it's not, weighted properly. And that means the pattern's kind of failed. And so there's a lot of work to be done here for gold miners still. And there's definitely not a lot of demand for them as much as people want them to go higher. It's just a steady stream of selling. I mean, we just keep seeing, last week was new lows in the gold miners, and it's really just out of favor. I think when gold miners start to come back to life and start to outperform gold, that's when I think they're going to be starting something really big. But there's a lot of damage done to this chart, and that's why I think it's going to take pretty much the rest of this year for hopefully gold and miners to build a bottom, start to turn up, start to make some higher highs and higher lows, and that'll start to get that upward momentum going. But right now, they're definitely out of favor still, and just not a good trade to the long side.
So I'm guessing you're not bullish in the next 3 to 6 months?
I mean, when they put in a bottom, there's a lot of upside potential when you look at this chart. From where they are right now, like before they break out, we're still looking at a 60% move. So we can get bullish here over the next, this is a weekly chart, over the next couple of months. It could turn bullish on a short-term basis. But right now, definitely not that excited. And in the grand scheme of things, to take us to the end of this year, which is pretty much over here, I don't really see a lot of bullishness happening. So, yeah.
Yeah. All right. So, okay, maybe we should wait on the sidelines then. Can you zoom out? I want to point out something pretty interesting. Now, this could just be specific to the fund, to the ETF. Maybe they've picked securities that aren't that weren't favorable over the last decade. But look what happened in 2011. It peaked. And then look where it is now relative to the 2011 peak. Now, gold, the underlying metal, the commodity, it has breached 2011 highs, where the miners, according to this fund, the GDXJ, are we looking at the GDXJ? Yeah, the GDXJ, it's nowhere near its 2011 highs. How does that make sense?
It doesn't really. It's just crazy. I mean, we've just seen this sector so out of favor. It's so beat up, and it just continues to drop. I mean, so many people gave up on it. Maybe Bitcoin was a big chunk of it, pulled a lot of money out of the precious metals sector. Overall, though, when you look at this chart pattern, I mean, this is a typical kind of commodity-based bottom. It takes like 5, 8, 10 years. We're starting to see kind of some significant major highs, some significant higher lows. This is a lot like the uranium sector. I mean, I think we're coming out of what could be an 8, 10-year bear market, and it's just in the infancy stage. And I think there'll be a time when hopefully these catch up and get back up there. But it is crazy that gold is higher. These companies should be making way more than they were way back in 2011, yet they're super undervalued. It doesn't make a whole lot of sense. Maybe we're missing something, but
they're not producing anything, right? These are mostly, there's some mid-tiers in this
True,
fund,
yeah,
but
the
if you're
juniors
factoring in juniors and explorers, they're not really producing anything. All right, let me give you one more statement for this chart now. So gold miners, the junior gold miners, should rally 4 times, so 400 to 500%, just based on historical precedents.
Yeah, I think they will. I mean, the sector is explosive. It can do that very easily. Individual stocks are moving 1,000, 2,000% when you get into these juniors. So there's a ton of potential when they start to run here.
Okay, let's move on to the S&P 500 now. I know when we spoke last about a month ago, you had moved your cash position back into equities. So you've captured some of that run. It's been stalling. The momentum looks like it's been stalling over the last couple weeks now. So what do you think is going on? Is that just a healthy pullback, or are we seeing the beginning of a bear trend?
Yeah, the market is hanging on to a thread. It's stalling. It's a lot like this type of scenario right here. We had another one back over here. We had one over here. So we're in this similar type of market where the stock market is very close to rolling over and breaking down in a pretty big way. And I think we could see this. We're going to find out in the next week or two which way this market goes. If we were to zoom into the daily chart, you can see we have had a nice ABC, a little three-wave correction. It's a complex correction. That third wave down, the C wave, which breaks a previous low, is what kind of cleanses the market. It creates massive panic because a lot of people will put their protective stops here. It creates a huge wave of panic, which we saw. We saw panic selling on the New York Stock Exchange of about 33 to 1. So 33 shares being sold on the bid to every one being hit on the ask. And that's like 33 people running for the door. Well, one person says, I'll just hold on to my positions. Anything over 3 is extreme. So 33 was 10 times that. And we saw that big volume, lots of panic. This is a signature kind of bottoming formation. And I think we're going to find out here. We're back up to these key moving averages. Can we push and move higher? Or is it going to stall out? And then the big question comes down to, is it going to do one of these types of stalls right here, where it maybe takes 2 or 3 months to work itself out? And we're kind of in this similar scenario where a lot of sectors are out of favor. Maybe we're going to rally up a bit and pull back, do a double bottom. We just have to let this market do what it's going to do. But the long-term trend is still very bullish at this point. And it's really going to be defined over the next month or so if we are turning down in a big way, or if this is just a pause before another major run.
You did sort of call this. Now, earlier in the summer, you had told me that your indicators are pointing to a bearish pattern like the one we've seen over the last couple weeks. Now, did the timing surprise you? Did it come later than you expected? Because remember, you did move back into equities.
Yeah, so obviously I wanted to keep going higher because we got back into equities, but the market, this is kind of a end of summer little sell-off. And we've got a few things kicking in here. You got the debt ceiling and the Fed causing some movements and stuff. But overall, there's nothing out of the norm here. I'm not panicking by any means. I'm watching our positions because we could close out our positions potentially in a week or so, depending how the market technicals hold up, depending how sectors hold up. But overall, I think we're coming into October. It's usually a fairly weak time, and sometimes the market sells off a little bit ahead of that. So we'll see if we just had that October sell-off, or is the market going to continue to be weak through October, and then we kick into that holiday kind of Santa Claus rally. So really, who knows when the top is going to come? I'm not a fan of the type of price action that we saw here. If we were to just kind of draw some lines on this chart, really, this is a very narrow range that we've seen this market kind of trading in. If we were to just squish these lines down, and that means it's a low volatility market. Low volatility markets just keep wanting to grind higher. It's kind of like buy the dip. But when they break, they can get pretty ugly. And so we need to see if we can recover back into this channel, or if it's actually going to start a sideways pause here, a lot like we saw last September, October. We're pretty much dead on for timing. Look at September from last year. It sold off with a 3-wave correction. Well, September high, we sold off into a 3-wave correction. We're just starting to bounce. We're very similar to what happened pretty much the exact day that this did it last year. So who knows what kind of cycles at play. But at this point, I got a feeling we're in for another month of choppiness, and then we're going to see which way this market resolves, to the upside or the downside.
Okay. All right. But so far, your indicators, are they? Which side of the momentum are they pointing towards right now, do you think?
We're still on the upside, which was why we're still long. This market could recover very easily and take off. So,
okay.
A good chunk of that, real quick. If I was to just look at the Russell 2000, the Russell is a really good indicator of figuring out what's going to happen. And the Russell, if it can break through this upper range, this is speculative money. This is like the average Joe dumping money into high momentum stocks. If this breaks to the upside, the Russell 2000 has got about a 30% upside rally from this last move, if we were to just take the average highs and lows. So we're really close to watching this whole market, not just the Russell, but the NASDAQ, the SP 500 could rally, 28, 29%. And we could have a big blow off top. So really the Russell is what I'm watching. When the Russell breaks and volume picks up, that means everyone's chasing prices again, and we're going to get back into a favorable state Sectors are going to be on fire, individual ones. If it's the last run of the bull market, gold miners should kick into high gear and become one of the leaders. So there's a lot at play here. We're waiting for these channels to break. It's probably going to take another month or two, but there's big action coming end of this year.
Can you offer an explanation as to why the small caps, the Russell 2000, have stagnated all year round, while the large caps, the S&P 500, have reached new all-time highs?
I think a lot of it just has to do with people are pretty nervous. There was a big run last year, and now everything's taking a bit of a breather. And right now, I think there's still some nervousness in the market. And we just keep seeing money dump into the big blue chips, the big tech stocks. People aren't willing to stick their neck out right now and jump into all these little tiny stocks because they got hit really hard the very beginning of the year. And now most of them are treading underwater for the year still, most sectors. And so people are really gun shy. They don't want to jump into those really fast moving little rockets because they fall pretty darn quick. So it's just that steady stream into those big blue chips that are heavily weighted in the indexes. And we just see the indexes keep grinding up. And that's why we've got multiple trading strategies. We've got a strategy that's focused on sectors. It's been a tough year for the sector strategy. Our index strategy is absolutely killing it for the year. I mean, it's just amazing. So you have to make sure you've got a balanced portfolio that when the sectors are hot, you are cleaning up with it because they move 3, 4, 5-fold. But when they're not favorable, you better have a strategy that's lifting, doing all the heavy lifting in your portfolio that is based on either the indexes and or taking part of bonds, because bonds can be a very good trade sometimes as well.
What's in your sector strategy? Can you share some of that?
Well, yeah, generally what we're looking for are the top 3 sectors at any given time when the market gives us a new buy signal. And of course, it gave us a new buy signal about a month or so ago, kind of near the highs there. And then we just saw some selling kick into the market. So we're back down underwater and just treading. I think we're down about 1% on our position, which is really nothing overall. What we're waiting for with the sectors is we want to see the stock market in general outperform gold. We want to see it outperform bonds and utilities, consumer staples, all those basic kind of defensive plays that you kind of need during no matter what market condition, and they pay dividends. When the stock market is outperforming those, that's telling us that big money is actually moving back into some leveraged, asset classes or stocks versus just the defensive, how do we protect our money? So that's kind of what we're looking for. And we want to see that kick into gear, hopefully here really soon again.
So right now, are you favoring the defensive or the cyclicals?
What are we in? We are in home builders. We are in PHO, which is a water ETF, water holders. So it's kind of like a consumer staple in a way, although what else are we in? Can't remember what else we're in at the moment, but we're long technology. We're long the NASDAQ, along the SP 500. The sectors have been very dormant. Most of them, the ones that were showing signs of strength, have just traded sideways or slightly down over the last month or so. Really, just taking a breather. Hopefully, these are all bull flags, and then we're going to see them take off here in a month or so. Yeah,
home builders have had a nice run. You were telling me offline, unfortunately, your neighborhood is flooded. So talk about investing in your own life there. That was a hedged play there. All right, Chris, let's move on to Bitcoin. Hedged in real life, hedged in your portfolio as well. Let's talk about Bitcoin here. So you're telling me offline, Bitcoin's also in a bull flag. Now, I'm struggling to see that because it's taken a hit. Explain your thought process here.
Right. Okay. Well, let's just go back. We'll just go back to a couple of these. So, for example, the bull flag that I'm showing you, more or less, the market rallies up, has a huge move, which this was a huge move. It was over 100% move, and then it chops in these huge oscillations and goes flat for a long time. That's a bull flag pattern. That should resolve to the upside, and then you go out, you have another one, and eventually it will more or less consolidate, depending on how big one goes. It'll rally up and consolidate, and then it'll rally up and consolidate. And when you look at this, this super one that we've seen, let me just squish the chart out. It's getting a little messy here. We're in what I think is going to be like just a massive bull flag pattern, which you and I actually talked about a long time ago. I think it's going to take Bitcoin a year before it breaks to new highs. And I got a lot of flack for that. But the reality is it's stuck in this massive range right now, and it could trade sideways here for a long time, for potentially another several months. And eventually price here is going to ping pong around, and it should start to flatline, and then eventually it'll start to move up, and it'll start another one of those bull flag rallies. We've seen it with Bitcoin 6 times in the past. This pullback is nothing normal. It's actually one of the smallest pullbacks after one of these significant rallies, percentage-wise. So it's holding up actually really good in the grand scheme of things, but it needs a lot of time to oscillate and kind of work out the bugs and for the positions of the Bitcoins to change hands to new investors. There's a lot of money that was spooked out of the market right in here when it broke down, and everyone who chased it up got spooked out. And so it's just changing hands. But that's the bull flag. I mean, it's pointing to a lot higher prices. In fact, we could use Fibonacci extension and get an idea of where this last standout low, where that momentum move is. And more or less, the 618 is usually if the first resistance level. If you hit that level and pull back a bit, typically you're going to hit that 100% measured move. And you can see it. We're looking at pretty much 90,000 to the upside. Right. And so eventually when it gets up here, it's probably going to have some type of pause or pullback as it tries to eat through all this resistance. And then boom, it's going to run up and hit that $89,000, $90,000 mark. But that might not happen until next year. That's my game plan, mid to late next year.
Well, so if you take a look at 2017, now let's take a look at the chart here. Let's take a look at what happened in the last major bull run.
The future, I only have futures, and futures didn't start here, so I can't go back there, unfortunately. But it came up and then it crashed and went out of favor for a long time.
Yeah, exactly. So that was my point. It went out of favor for 2.5 years. It flatlined for 2.5 years. They called that the crypto winter. And I think if I remember the chart correctly, in 2017 we had a peak. It came back down, and then it climbed up a little bit before crashing back down to its then lows, right? Which is similar to what we're seeing now. So I'm wondering if that pattern could be repeated, and if so, we're going to possibly see even lower lows than what we're seeing today before it flatlines. What do you think?
I think it's really possible. I mean, I still have a downside target of like 21 and potentially 16. And so we need to see, this is the first bounce. This was like a really significant bounce that we had. And when you look at the chart, I mean, it was this low. There was a big gap here. There was a multi-day low over here. So this is a major support level. So it just hit that and it's bounced. And now we need to see if it's going to actually break through these and actually fade down lower like you were just talking about, 2018. Yeah. It kept grinding lower and lower, and 21 and 16 are the next downside kind of moves. And that's why I don't like to try and buy something when it's in a downtrend, because it could last for a year, could last for 8 years, or like the precious metals market. There's no point, just because you love it, you shouldn't hold it when it's not favorable, right?
That's a good point. Yeah, just because you love it, you shouldn't hold it. You're not married to something like a person. So is it too early to tell if that bear pattern is going to continue? Because we have come off from the top, but just from a technical perspective, is that too early to tell if that trend is going to continue or not?
It's tough. I mean, right now we're kind of in no man's land. We're making a lower high. We did make a lower low over here. I mean, technically the trend is down. It looks like a head and shoulders pattern, right? It looks like the right side of a head, if I'm not mistaken. Are you talking about this one here as a shoulder and a head and a shoulder?
The pattern we're currently in, yeah.
Yeah, I mean, I don't know how you're looking at it. You could argue that that's a big head and a shoulder, but it's pretty ugly. Really, this is going to be a critical line in the sand. For it to close below there, that's going to be pretty major. And then we are making lower highs, and we're kind of just treading water here. At this point, I mean, on a short-term basis, it really depends on how you look at this, right? If you're an investor, I think Bitcoin, I mean, it's still in a major bull market in terms of it's in a bull flag, just like gold, just like silver and miners. They're more or less flagging down out of favor right now. I think longer term, they're going higher. But in a short-term basis, when you look at it, this market really is struggling at this point. It's made a drop, a little bear flag. It's had the second drop. It's in a bear flag. It's under all the key moving averages. It is pointing to lower prices in the near term. Over the next week or so, we could see it come back down. And again, it's stuck in a pretty big range. You could argue too, it's stuck below all this level. And when it breaks out of whichever way it breaks out of this level will be fairly significant. I think if it breaks to the upside, we could be off to the races. Maybe it's going to hit 90,000 sooner than later. But as long as it stays in this range or breaks below it, it's kind of dead money. You don't really want to get involved because it could trade in this range for a long time.
Yeah. All right. Good point. All right, Chris. Thanks for your updates, and we'll follow up soon. Whenever the markets move again, we'll call you up, Chris. Thank you
Sounds
for coming
great,
on
David.
today.
Take care.
And thank you for watching Kitco News. Don't forget to subscribe and follow us on Twitter at DavidLin_TV.